Good afternoon, all, and welcome to the FX Daily Wrap Up. I guess it's morning, evening, or afternoon, depending on your neck of the woods. One of the things I was going to touch on here was I've been looking for a dip in the euro. So my thought process being that the euro will eventually, will be going higher. I wasn't, willing to go and take the short side. It's got some lost some opportunity costs or experience opportunity costs in that sense, but I do expect the euro to go on and move higher from here. I'm going to point out a couple of things here. We generally don't touch a story. We do in our European crossover, basically to get what we call the flavor for the day. Kind of gives us an idea of where things may be going. So it's very short. I'll just touch on this. It plays into what we're talking about. It says the dollar was a little change against the euro on Thursday as investors were reluctant to take large positions before the next Fed meeting. Tepid inflation and weak economic data in the midst of the U.S.-China trade war has fed expectations that there will be close to cutting interest rates. That's brought the dollar down from the two-year highs reached in May, but investors are reluctant to get bearish on the greenback without further confirmation that rate cuts are near. I think in order to see dollar weaken further, you need to see some follow-through on the Fed on the rate easing. Okay, there it is. That's it. We just touched on that. So that was the thought, is that, hey, maybe it's gotten a little bit too bearish. Okay, well, here's my take on that. And why I'm saying is I think it's I think it's a value area at this point. And we'll take a look here. Is that we did have, this morning we had our import-export data, also had some European data that had actually come out. You can see here industrial production came in actually, what they were looking at for minus half came on like minus 0.4. Still, once again, like I said, the euro was already a little bit on the drag anyway. But here's my take, and then coming in later on today, we're going to have some Kiwi data coming out at 6:30 Eastern here. But as we roll into the next day, which will be Friday, do have some German wholesale prices, French CPI, industrial loaders out of Italy. But here's my take in here is, pull this down. As we come into retail sales, we also have industrial production. One of the things that we've been experiencing is, and also University of Michigan is going to be preliminary. So we have a slew of data, okay? My thought process is, and we've got retail sales. Look, we've been experiencing weaker data overall, including the NFP. I think that may have, certainly have an effect to a certain extent in retail sales. So let's put ourselves in looking at things in a different way. Okay, so if you've been short the euro, you're one of those folks, and we had some in the room that got short the euro and have ridden this, pretty good chunk of the way down. Then you're thinking, or for others, you're thinking, hey, look, retail sales is coming out. Maybe they won't be that strong. We've been seeing weaker data. Might not be a bad idea if I already have 30, 40, maybe even 50 pips in my pocket now. Probably a good area to go in and cover some of that. And that's what I'm thinking here is that when you look at it, I believe not only from that vantage point, but also from a technical area, we've already come down here to a pretty decent area. Actually, yesterday we had the bias chart support at 1272. I think I moved it down to 1266. Really, I was saying, really, any move sub 70 is going to be great. And I thought we might even see a dip down into 72 yesterday afternoon as we were weakening. And I thought that the potential was that we could push a little bit lower for late bulls that had come in, maybe pressured. But I think this is a very good value area here. Here's our bias chart support for today, which is 1266. I thought maybe we'd even get a stretch at 1258 if the dollar index could push higher. Well, if you take a look at it here, we've had a pretty good little ascent here in the dollar index. Not a whole lot, but here's the take, is that it's had a very difficult time here with the cash dollar index. I think in order for us to boost ourselves higher, we're going to go and have to close the day above 97.12. Anything's possible. My thought was that we could get our bias chart resistance was at 97.15. I think we may have even moved that up a little bit. We can go in and take a look. Yesterday was 97.11. So we did have 97.15 here. I thought we might even get a stretch into the 20s, but we're simply not getting that stretch. Now, it doesn't mean that we might the market might push itself even a little bit further here, possibly. I don't really think so here, but we'll see what happens. Anything's possible. The market's relatively quiet, but like I said, to me, if you ask me, and this, our big move, what was our resistance at the beginning of the week? 96.91. We quickly hit it. We quickly hit it on Monday, and then we dipped back down, and we've been struggling. Finally now starting to push up high. But to be honest with you, look, it's all relative. If you figure from where we've fallen, this is really a piss poor reaction, if you ask me. I mean, we came here Friday. Here's our 96.51. We tagged that, took it out by just a few pips. That was our bias chart support on Friday. That confluenced with the 38%. So really, you had a good chance to really zoom up. And instead, the market's just kind of like struggling, just barely moving up there, like, someone having a very, very tough time walking up some stairs. So that's my take here. Now, here's the 97.15. Pointed this out to the people in the room. There is a little, you can see here, these 3 bars. This level comes in at 97.11. So, like I said, I'm not seeing this where the cash dollar index, you can see here where it bumped up above 97. And we're looking on a 2-hour chart. And we roll back down. The second time above 97.11, you should have spooked the stops and made a pretty quick run up here. As I said, maybe even squeeze it up into the 20s, and we're just simply not seeing that. So I think it's a very good value area for the euro here. I like the euro overall, really, as I said before, as a de facto for the cash dollar index, because it comprises 56.4%. So, if you don't like the dollar, which I don't like the dollar, I don't think it's going to hell in a handbasket. But once again, the thought was, when I covered the story, they're talking about the Fed. They got Fed next week. Well, you've already had a pretty good pullback. And the thought was there was even some, when they were looking at the Fed, the CME Fed tool, there was even a 17% possibility a couple of days ago, or maybe it was yesterday, that the Fed would actually cut at this meeting. I don't think that that's necessarily going to be the case, but I don't see the Fed necessarily, looking weighing the option on the other way. So I think, like I said, after this fall, I think that this market has had just a very weak bounce, to say the least, and that I think that the potential is we're going to, work lower. We may find ourselves, starting to, if we start to slide on Friday, start to work lower. Matter of fact, when we've had these data releases, it hasn't been much to write home about, to say the very least. So that's my take on the euro and the dollar index here. I think it's a value area here, value buy. I got long myself. I'm pretty satisfied with it. Even if I were proven wrong, and hey, we can all get knocked for a loop. But it's like, to me, I feel like if I do, I'll be falling out of a 1-story window. You know what I mean? So as opposed to maybe some that got long here, they're falling out of a 2-story window. But like I said, I think it's a pretty good value. The dollar CAD, we'll go in and touch on that real quick. We talked about that. I shared that in the room. If you're on the European crossover, if you remember, you're able to watch that live at 4 a.m. Eastern time, or recorded and available about an hour and a half before the New York opens. Stelios records it, makes that available. So if you're not up during European trading, you can certainly take advantage of that. And we certainly put in the scalp or short-term trading support and resistance levels along with the analysis for each of these pairs. Looking here at the dollar CAD, I remarked yesterday, actually in the room, was at 1329, was a pretty good little area here, and on up to 1348. We did go in and rotate lower. Now we're kind of pushing up a little bit here, obviously with a little bit of the dollar strength, but still, like I said, we've had such a pretty good hard fall here, and you can see it touching here with the slower exponential moving average, but we're below this trend line. Really, any moves up here are going to fade it. Actually, I punked out. I should have gone and taken it. I had the opportunity actually on the close, and one of the things about the dollar CAD is sometimes it'll just move up just slowly. Had the opportunity myself really on the close right here to take a short here at 40, and look, we came off 40 pips. I was really kind of upset with myself for not taking that. I think, like I said, we will end up going lower. The other big mover came with the Aussie data. You can see how weak the Aussie is here. I'll go and take us to the cross rates page. We had posted some charts in the room ahead of the Aussie data. Let's go and move into that. here's what we're looking at, what I think is very important here on the Euro Aussie. Here's that 63.41 here. Very, very important level here. And now there's been some opportunities for some of us in the room to cover some short positions. I actually got short last night. Boy, I left a bad taste in my mouth because I don't like to hold on to positions overnight. But I felt pretty confident with this 63.41. They came close to stopping me out, but we did go in and come down. And actually, the euro also has been reacting very well to the euro itself. So when the euro was weakening this morning, we had opportunities to cover not only around the upper teens, but again, also at the reactionary level at the time, which was 63.09. If we were to get a close below 62.89, it's actually going to open the door for a move down here to 61.60, which I refer to as the breakout area, just above here, 61.60, right there, would have that. Certainly, it's holding up very well for now, and I think the euro, like I said, if you were short, I think you had the opportunity to go on and cover those scalp shorts at this point. But this will be key to hold this market in, is a 63.41. The Aussie data, it wasn't bad in the sense of the overall print, but what they were focusing on was the unemployment rate. And the unemployment rate now, suggests that they're looking potentially for another 2 more rate cuts, but potentially one here in August. The Euro Aussie was able to pare back. I think Amanda shared there was a report out of the Sun newspaper that they may not have a cut as quickly, or they're not so sure when that cut will take place. That allowed the Aussie to strengthen. And fourth, the euro was already weak. It allowed me an opportunity to go on and cover. So I was glad about that, because I thought we were going to bounce up to that 63.41 and quickly fade off of that. And that was not the case, as this Aussie just continued to stay weak throughout the whole time. Looking here with the Aussie yen, I'm going to go to that real quickly. This thing has just been stuck in the dirt. And I've called it in the charts where, we posted the charts ahead of the Aussie data. Like I said, you may want to consider the advantage of getting a membership, a subscription with ForexAnalytix. You can 10-day subscription for $1. Get the opportunity to go and look and see what the site has to offer. Very complete, thorough trading platform, including real-time news, and several disciplines to go over, whether it's harmonics or Elliott wave or basic technical, which Blake does that each day. I'll do it over the weekend, and I did touch it on a couple of days ago. But I'm looking for, as we referred to, was the death march to 74.73. We have moved the bias chart today to take in potentially a dip down here to the 61%, but this has come to fruition, this market moving, but it's been so quiet. And one of the things that really opens the door that potentially we could even move lower is that this market has simply not responded to the move in equities. So we're going to move back into the main page. Peso's been trading relatively quiet. We bounced around in that level that we had before here on the dollar yen, but we've stayed in a relatively tight range overall. But the S&Ps are still holding up relatively well. Nothing happening here in the dollar peso. It still has remained the same on the upside, 19.23.6. And then on the downside, they've actually given it some room if it wants to move lower, but I really don't see anything happening here with the peso. You can see here the euro trying to push up a little bit higher here. And once again, I think it's a good value area here with the euro. The data that's going to come out, look, if I'm long the dollar and I'm going into retail sales, I'm thinking, well, God, the data's been pretty bad overall. Certainly have not been any upside surprises. So my thinking would be, if I was long the dollar, I'd be using this run up in opportunity, and I'd probably be disappointed that I did not see a move closer towards 97.20. So I'd probably be getting the heck out of Dodge. And why I think that the euro at this point, and it's already had a pretty decent pullback, is in a decent value area, although we're trading relatively quiet. And let's see. I was actually working a bid here at 1262, but we didn't quite make it down there. And like I said, I thought we might be able to make it down there and might even push just a hair bit below it if we hit some stops in the cash dollar index, and we're just simply not seeing it. Cash dollar index is just sitting there, but I think, once again, it's a good value area here, down here with the euro. Very nice pullback. Potentially the move off of the lower one would take us down to 1256, and there's a good confluence there. But like I said, we've already had a pretty good pullback here. I think the risk is that the dollar could sell off going into FOMC. So like I said, that the reason people evened up their positions, that's fine, but the response from the cash dollar index has been tepid at best. That's all we have here for the FX Daily Wrap-Up. I've got a date with the dentist, henceforth the earlier show time, but thanks for joining us here, and have a great rest of the day trading.